Good morning, students. Welcome to our revisional lectures, our LVRC batch for the topics, I should say, which are generally not much paid attention to. However, in the exams, they have a lot of relevance, especially whenever, as you would have heard students saying that the paper was tough. Actually, it is not tough. It is based out on these small topics which are generally ignored, which are generally not paid attention to by the students because they are small topics, they are slightly theoretical, students find them a bit boring, and that is why many times students miss out on preparing these topics. But let me tell you students, these topics are very important when it comes to exams, when it comes to those odd type of papers. So today we'll try to understand these topics with some practical approach, and the best way of studying, as you remember in our previous classes we have done, is by not reading out the theory, because reading out the theory at times becomes boring, at times becomes very monotonous. So instead what we are going to do is we are going to look at these topics from the practical perspective, or I'll say exam perspective. Now, the moment you look at these topics from exams perspective, one, it becomes easy to retain. Two, it is also easy to understand. Now, see here, our module has beautifully given the topic in short. That is, let us recapitulate, but that all things can be done when you are doing regular classes. Now, right now, we will go through the question answers. Now, even though you will be reading the question answers, still you will find that it makes more sense whenever you prepare question answer format. So let us start. Geeta, are you available to help me in reading? Geeta, is it possible for you to read out along with me?
Yes, sir.
Okay, then let us do one thing. I will read the question, you read the answer. So this will just make it more interactive for everyone, right? So see what type of question you will get or you may get. So Avatar Industries, a registered person under GST, has sold whole of its business to another businessman who is Rolex. Determine the person liable to pay GST, interest, or any penalty under the GST law determined before sale but still unpaid. So again, students, what I had mentioned in my previous revision classes, what is very important, see, three-step approach. What is the three-step approach? First, understand this question is pertaining to which topic, or this question is pertaining to which provision from the law. The second step is recalling that provision, trying to recall what are the key points of the provision of that particular topic to which this question pertains. And then the third step is finally answering the question which requires a particular type of presentation. Now, first point when you read this question is, what are the facts of the case? A businessman, Avatar Industries, has sold whole of its business to another manufacturer. And I'm just adding a word, though not written over there, but which you can infer from the given facts that it is a running business, it is an going concern. Now, firstly, when we talk about going concern, what comes to our mind is exemption chapter first, which says that transfer of going concern is exempt. So there is no GST on sale of business in a going concern form. Two, classification chapter comes which says going concern is a service, so it will not be classified as supply of goods, it will be classified as supply of service. Third, ITC chapter comes into picture which says that whatever is the ITC with the transferor business can be given to the transferee business by using relevant forms and following the procedure. Now, these three topics talk about what will happen on the date when this business is sold out. So first, it is a supply of service. Second, no GST is applicable on this sale. So whatever consideration you would have received for selling your business, no GST applicable on that. And third, if there is any ITC balance with the transferor, that can be given to the transferee. Now, all these require some procedures, some forms to be followed, assuming all those are done. But is this question talking about the date of transfer? Answer is no. It is talking about determine the person liable to pay GST. It means whether the transferor is liable to pay or transfer is liable to pay. But you will say, sir, just now you said that it is exempt, so why there will be any person liable to pay? Answer is they are not talking about the GST on the sale of business. They are talking about GST of what? GST, which is for the period prior to sale. So let us say the sale takes place today. Today is 25th of Feb 26. Today, there is no GST liability on sale of this business as per the exemption notification provisions. However, what if some past period liability comes up 23, 24, 21, 22, 24, 25? Who will be the person liable to pay? If this liability comes up, this is what is the question. So they want to answer you because see, let us say I am selling business to Geeta. Today, once I've sold the business, my responsibility for the time being is over. Now, maybe I may not be even traceable. I may not be known to Geeta after this. I may not be in touch with her. But what happens if any prior period liability comes? Because at that time, I was the owner, I was running the business. Now, the question is, who is the person who will be liable to pay? Whether me, that is the original businessman, because the period, the liabilities of my period when I was running the business, or Geeta, who is the present owner, because now the demand notices are raised. This is what is the moot question. So the three pointers which I revise at the start, all the three provisions are not applicable. Rather, the provision of this chapter. Now, what is this chapter that we are dealing with? This chapter is liability in special cases. Now, if I take you to the upper part, let us recapitulate part. So you will understand in this, we are going to study liability in different cases. Like here one, you can see heading liability in case of amalgamation or merger. Is our case amalgamation merger? Answer is no. Liability in case of principal agent. Is our case principal agent? No. Then liability to pay in case of transfer of business. Now, this is what is our main point, which is applicable over here. So, Geeta, can you please read this section pointers?
So font size can be increased. It is too
Yeah.
small.
It's fine now.
Yeah.
So,
Liability to
see, one
yeah.
second, sorry. So, how you have to approach any question, students? First, read the facts minutely and try to figure out the question is dealing with which provision. I pointed out three provisions: classification, exemption, ITC. But all the three provisions will not apply over here because the question is not about the liability at the time of transfer. It is about the liability which may arise in future to Geeta after she has purchased my business, but the liability pertains to the prior period when I was the owner. So for this, you come to this chapter. So first step is identifying the question relates to which provision. Second step is recalling the provision, what we are doing now. So first step, we understood the question. Now the second step, we are trying to recall the provision, and third step will be the presentation. Yes, Geeta, now you can read the provision.
Liability to pay in case of transfer of business, Section 85, where transfer of business wholly or partly is made by way of sale, gift, lease, leave, and license, hire, or in any other manner, up to the limit of such transfer, transferor and transferee are jointly and severally liable, wholly or to the extent of transfer, to pay tax, interest, or any penalty. Where transferee carries on such business either in his own name or in some other name. Transferee shall be liable to pay tax on the supply of goods, service, or both effected by him with effect from date of such transfer.
Okay, now what is the point? So whenever there is a transfer of business, how? Either by way of sale, what is our present case, gift, lease, etc. Then up to the time of such transfer. So this particular section deals with the prior period liability up to the date of transfer. Now, till the date of transfer, whatever is the liability, in future, whenever this liability will come, whenever the notices will come, the department can collect the liability from whom? Either the transferor or the transferee. So it can be collected from any one of them, and they are jointly and severally liable. This is the key point. What is jointly? Either together they can pay, or the law can collect the liability either from transferor or transferee, any one also, that is what is severally liable. So in such cases, the liability to pay is on both, and it can be either one of them or both together. That is left to the department. Most important, they have clarified whether or not the transferee. So in my example, Geeta has purchased my business, so she's transferee, I'm transferor. So whether or not she continues the business in her own name or in any other name makes no difference. So how the business is now continued, whether the name is continued or not, makes no difference. This rule will continue to apply. However, 85 clarifies further that whatever is the liability that may accrue for the further period after the date of sale. So today the sale has happened. Now, whatever liability will come in future after today's date of sale, that is not going to be liability of transferor. That will only be liability of the transferee. Correct? So this is how the provision is coined. And then there is a note in case of death of sole proprietor. So let us say this business is sole proprietary business, which is again the case. The transferee shall be liable to pay any tax, interest, penalty due from the transfer. So in this case, since now transfer is no more, now in this case, whose liability it will be? It will be liability exclusively of the transferee. But this is when only if there is death of the sole proprietor. So our case is the case of sole proprietor. But is it given that there is death of the sole proprietor? Answer is no. Yes, Geeta, can you now please read the answer that will explain as a third step, that is presentation. Yes, Geeta.
Where a taxable person liable to pay tax under this Act transfers his business in a whole or in part by sale, gift, lease, leave, or license, hire, or any other manner whatsoever, the taxable person and the person whom the business is so transferred shall jointly and severally be liable wholly or to the extent of such transfer to pay the tax, interest, or any penalty due from taxable person up to the time of such transfer, whether such tax, interest, or penalty has been determined before such transfer but has remained unpaid or is determined thereafter.
So
The
see, what is the first step? You mention the provision. So how do you start writing the answer? So we are in the third step, that is presentation. In presentation again, you should first mention the provision. Now, what is important to note, this provision is not written in the law's language. So that is not the expectation that you should write or quote the legal language. You can write it very well in your own language. So it is written in own language, that is in your personal language. And first step is to reciprocate the provision. Now, it is not necessary that you will reproduce the entire provision. You have to reproduce only that much part of the provision which is relevant to your case. So that much is mentioned that whenever there is sale, etc., and there is any liability relating to the past period, both will be liable. Then comes the second part, where now to the given fact of the case, you will apply this provision, whatever you have written, and you will give the final conclusion answer. Yes, Geeta.
Thus, in the given case, Avatar Industries and Rolex manufacturers shall jointly and severally be liable wholly or to the extent of such transfer to pay GST, interest, and any penalty determined before sale but still unpaid due from Avatar Industries up to the time of such transfer.
So finally, what is the conclusion given? That both Avatar also and Rolex also, both shall be liable to pay, and it is immaterial whether the liability is determined at the time of transfer or it is determined in the future. So since the liability pertains to the past period, it is immaterial when this liability is computed. Both are the persons liable to pay GST, tax, interest, penalty. I hope this is clear to all students, right? Let us go back. So now we go back to the second case. Now, what is the second question? ABC Manufacturers Limited engages Raghav & Sons as the agent to sell goods on its behalf. So now it is the case of principal agent. So principal is this company and Raghav & Sons are their agent. Raghav & Sons sells the goods to Swami Associates on behalf of ABC, determine the liability to pay GST on such goods as per the provisions of Section 86. Again, the same question is arising. Who is the person liable to pay? Now, here the transaction is that principal is ABC, the agent is Raghav, and Raghav is appointed or given the power to sell goods on behalf of ABC. Now, Raghav has sold goods to Swami Associates on behalf of ABC. So the question is whether ABC is required to pay, that is, the principal is required to pay, or the agent will be required to pay. So again, we go to the provisions first. So this is the provision relating to principal agent. Geeta, can you please read the provisions, Beda?
Liability of agent and principal, Section 86. Agent supplies or receives taxable goods on behalf of principal. Agent and principal are jointly and severally liable to pay tax payable on such goods.
So again, what is given? Wherever, now this is important. When this section 86 applies, when the principal's goods are sold by the agent, and most important, it is sold on behalf of principal. Now you'll say, sir, what is this on behalf of? See, there are two ways in which agent can sell. One, it will inform the customer that boss, whatever I'm selling, these are not my goods. I'm only acting as the agent of ABC. So this is what is on behalf of ABC. Second possibility is agent will sell the goods on its own behalf. Now, what is on its own behalf? The agent has already purchased the goods from ABC, and now the agent is selling the goods on its own behalf, that is in its own name. So it becomes like a trader. Now, this section 86 will apply only in the first case, not in the second case. So the answer for this will be same written like in the first manner, that since the goods are sold by Raghav and Sons on behalf of ABC manufacturer, hence the liability is on both. So the department can collect tax from both the principal also, agent also, and again it can be collected jointly. That is, both will be liable to pay, or it can be collected from any one of them. That is, severally it may be liable to pay. Fine, students. Let us proceed. Now, a person liable to pay GST, interest penalty, dies. Determine the person liable to pay GST interest penalty from such person under the GST law. Determine after his death if the business is carried on by such person is continued after his death by the legal representatives. So now the cases of death of the person, obviously this person is a proprietor, because only then this particular issue will arise. So let us say a proprietor, Mr. A, was running a business. Mr. A dies, and the son of Mr. A, let us say Mr. C, and the daughter, let us say Miss D, they are carrying on the business after the death of this person, Mr. A. Now, most important is that if the business is continued, then what is the answer? Second, in question 4, what they have done? They have slightly tweaked the question 3. So in question 3 above, what would be your answer? If business carried on by the person who has died is discontinued. So second possibility is the legal heirs will say, Ki Baba, we cannot run the business. Let us close down the business. So there are two possibilities. So Mr. A was running a business. Let us say Mr. A was distributor of some Britannia products. So it was a distributor. Now, suddenly, because of some heart stroke, Mr. A expires. Now, obviously, for whatever period Mr. A has run the business, in case if there is some past liability that is coming up, who is the person required to pay the liability? Two possibilities. This distributorship business is continued by the legal heirs, the son and daughter. Second, son and daughter have closed down the business, sold away all the assets and liabilities of the business. In both scenarios, who will be the person liable to pay? So for this, again, we have to go to the relevant provision. So first step is you have to understand the question. Second step is, basis the question, you have to identify the right section. And only after you understand the right section, then the question will be answered or can be answered. So Geeta, can you please read provision 93?
Yes, sir. On death of a person liable to pay tip, Section
TIP
9,
is tax interest penalty.
tax
So
interest
short.
penalty. If business is continued after his death by legal representative or any other person. Such legal representative or the person shall be liable to pay tax interest penalty due from deceased person. Business is discontinued after his death. Legal representative shall be liable to pay tax interest penalty out of this estate or deceased person to the extent to which his estate is capable of meeting tax interest penalty due. Successor shall be liable to pay any tax interest penalty due from such transferor in cases of transfer of his business due to death of sole proprietor.
So what does the provision says? First possibility, the business is continued. Now let us take more examples, though not given in the question. So Mr. A died, and now there is a tax liability of rupees 12.5 lakhs, maybe including interest penalty both. So tax interest penalty total is 12 lakh 50,000 of some past period. Let us say 23, 24, 24, 25. These 2 years assessment audit was done, and the tax liability comes to 1250. Now Mr. A has expired. Now, who will pay this 1250? So you have to check whether the son and daughter of Mr. A, that is D and C, whether they continued the business of Mr. A. First possibility, yes. Then entire 12 lakh 50,000 is payable by D and C as their legal heirs, and this entire 1250 is the liability of D and C. Second possibility, they are not continuing the business, they have sold off the business. Now, if they are not continuing the business, now you have to see that after the death, now we know that in India we have inheritance law, we have devolution law. So the property of the deceased is given to the legal heirs. Now, how much of the property of A is given to the legal heirs, that is C and D? Let us say C and D both together combined received total property of rupees 7 lakh 50,000. Now, importantly, even though the tax liability was 1250, but since the legal heirs could only get 750 out of the property of the deceased person, hence C and D in this second scenario will be liable up to 7,50,000 only, and the balance liability will be automatically waived off. So two answers, because both questions were asked. So here I am also quantifying for a better understanding. So let us say the liability of A of past two tax periods is coming as 1250. In first scenario, where the business of A is continued by the legal heirs, entire 1250 is payable. Second possibility, they have discontinued the business, they have sold off the assets and liabilities, and the total property that they realize from Mr. A's estate is only 7,50,000. In such cases, even though the total liability of GST tax interest penalty combined is 1250, but the legal heirs will be required to pay only 7,50,000 because they have received only that much portion of the estate of A. Now, adding one more question, though not present in our original question, let us say the business of A is sold off to another person. Now, this is the next part. Then in such case, the successor shall be liable to pay. So let us say the business of A, after his death, now they are not going to continue C and D, but they sell off the business. And now the business is being run by another person. Now this becomes same as our first section that we started with, section 85, where it is said that wherever business is sold, the liability is joint and several. So that logic is applied over here. Now this 12,50,000 liability will be payable by the successor. So let us say X is purchasing the business of A. And in such cases, X shall be liable to pay the tax interest penalty. So in my example, 12,50,000 due from the transferor, that is Mr. A, in case transfer of business due to death of the sole proprietor. So because of death of A, the legal head decided to sell off the business to X. Now X is the successor of this business. In such cases, X will be required to pay 12,50,000. So this is what is the provision relating to death. Now, what happens to GST liability when the estate of taxable person is under the control of court of wards? Now, what is this? So there is a special court called as court of wards. Now, what are wards? So when you have your own biological family, it is called as your legal heirs. Many times you may not have your biological family, but you may be appointed as guardian of someone. So you are the guardian and that person is your ward. Now, the question is, what happens to the GST liability when the estate of the taxable person is under court of wards. Why? Because that ward of whom you are the, let us say, guardian is a minor. So in such cases, the minor itself cannot run your business or cannot take care of the estate. So in such cases, it goes to court of law. Now, what will be the scenario? So let us say same example, Mr. A, he did not have any legal hair, but he had been nominated as the guardian of Miss E. Miss E is a minor. Now Mr. A passes away with the tax liability of 12,50,000. And since Miss E is minor, so everything of Mr. A, who is the legal guardian of Miss E, goes under court of wards. Now, in such cases, how will the liability of Mr. A, that is this 12,50,000, be dealt with? So, for this, we have to go to section 92. Please read, beta.
Liability of court or wards, etc. Section 92, where the estate portion of the estate is under the control of court of wards, administrator general, official trustee, or any receiver or manager, or any such person appointed by or under order of court. Tax interest penalty shall be levied and recoverable from such court of wards, administrative general, or official trustee, receiver, or manager. Such tax interest penalty shall be determined, levied, and recoverable from above mentioned persons in same manner and same extent, if he were conducting the business himself, and all the provisions of GST law shall apply accordingly.
So, similar to our previous cases, here now, since the ward is minor and hence the estate of Mr. A after his death is under the control of court of wards. Now, the same thing may happen in case of a trust where the estate may be under the official trustees, or in case of any other body of person, AOP or BO, as we say, body of individual or association of person, where the property is under the administration general. Now, in all these cases where the property of this person is under one of these persons' control, either court of ward or administrator general or official trustee, then the tax interest penalty shall be payable by them as if they were conducting the business themselves. So since now the property of A has come under the control of these people, now these people will be liable to pay that 12,50,000 liability of Mr. A. Next, discuss the liability in case of amalgamation merger, right? So this is a straightforward theory question. Yes. Please read it.
Liability to pay in case of an amalgamation merger of the companies, Section 87, where two or more companies amalgamated or merged due to order of court, tribunal, or otherwise, and order is take effect from the date earlier than date of that order, supply receipt of goods and goods between any two or more of such companies to
Okay,
or from each
first,
other.
let me explain this. So what it is saying, there are two companies who get amalgamated as per the order of court or tribunal, and order is to take effect from a date earlier than the date of that order. Now, what is this? So let us say today the order has come that company A and company B can be merged. Today is 25th of Feb, but this order is made effective backdated. Backdated means from 1st of January 26. Why? Because they had filed the application then, but it took the court this much time, so around 55 days, to take the final decision. And finally, today on 25th of Feb, they have given the order that yes, you both can be merged. But since you all have applied on 1st of January 26, so we are giving the order of merger effective from a back date. So that is what is the point. The order is to take effect from the date earlier than the date of the order. So order is passed today that yes, both of you can be merged, but effective from 1st of Jan. Now here main question is, what will happen to the transactions between 1st of Jan till 24th of Feb? because these transactions, let us say, were done by company A. And now the law says, or not law, the decision or the order of the court says, both of you are merged from 1st Jan. So now whether the old company A has to pay the tax liability of this period or the new merged company has to pay the tax liability, this is the point of discussion. Please read it.
Supply receipt of goods and goods between any two or more of such companies to or from each other, date from which amalgamation merger is effective. Such transactions shall be included in the turnover of supply or receipt of the respective companies. They shall be liable to pay tax accordingly. Date of order of court or tribunal for amalgamation merger of the companies. These companies shall
So
be
what is
treated as
this? So
distinct
this
companies.
date, one second, one second, one second. So this is today's date. That is the date of order. So today's date is 25th of Feb. And this is the date from which the order is made effective. So it is 1st of Jan. Now we are talking about this period transaction between 1st Jan to 24th Feb. Now what it is saying, there is supply or receipt of goods between any two or more of such companies to or from each other. It means they were having transaction between them. So two companies are getting merged, company A and B, and they were having transaction with each other. So when they were having transaction with each other, so the provision says such transaction will be included in the turnover of supply or receipt of the respective companies. Means what? Whatever turnover A has done, A is required to pay the tax. Whatever turnover B has done, B is required to pay the tax. But this is what is the turnover between these companies. They shall be liable to pay tax accordingly. Continue.
These companies shall be treated as distinct companies for the period till date of such order. Registration certificates of said companies shall be cancelled with effect from date of the said order.
So between this period, that is 1st Jan 26 up to 24th of Feb 26, for this period, these companies would be deemed to be distinct persons. And once they are deemed to be distinct persons, how the transaction will happen? That will come under Schedule 1, which says that whatever transaction happened between them, the provisions of the law applies as if they are distinct persons. That is what is the provision given. So for transactions happening between these companies, the tax is payable by the respective company. That is what is the point. Fine. Now, discuss the liability to pay tax interest on death of the person liable to pay. We already discussed this. With reference to provisions of CGST Act, explain the liability of partners of a firm to pay tax. Now, there is a concept which I'm sure students would have heard or studied even before, vicarious liability. What is vicarious liability? Vicarious liability means the liabilities of a company, but the directors or shareholders are required to pay. So when you are required to pay liability of somebody else, it is called as vicarious liability. Now here the case is the liabilities of the partnership firm. So whether partners are required to pay the liability. Now the general answer you will say is yes. Why? Because in the eyes of general law, including the Partnership Act, partners and the firm are one and the same. So whatever is the liability of the firm is obviously the liability of the partner. So partners have unlimited liability. However, this is okay when you read the general laws or you read the Partnership Act. Now comes the point, what will happen from the perspective of taxation law, because both income tax and GST both considers the partners and the firm as two separate persons for taxation purpose. Now, in such cases, will still the original rule of general law apply that partners will also be liable for the liability of the firm, or now the provision will change? That is what is explained in section 90. Nothing different is given. It says the same thing what is given in the Partnership Act and the general law, that partners will remain liable for the liability of the firm. Now comes the next question that is answered over here is, what if some partner retires? Then how his liability will be? Whether he will still be liable, that is the next point to be answered. Please read better.
Liability of partners of firm to pay tax, Section 90, general scenario. Firm and each of the partners of the firm shall jointly and severally be liable to pay tax interest penalty in case of firm where any person retires, he or firm shall intimate date of retirement of said partner to commissioner by written notice. Such partner shall be liable to pay tax, tax interest penalty dues only up to date of his retirement if above intimation given within 1 month of retirement or date of intimation if above intimation given after 1 month of retirement.
So the first answer is that as per the general laws and the Partnership Act, the rule continues in taxation laws also, that even though firm and partners are considered as different persons in taxation, still the partners are jointly severally liable for all the liabilities of the firm, so even tax liabilities. So if the firm has any outstanding GST liability and if it could not be recovered from the firm assets, it will be passed on to the partners, and the partners will be either jointly, that is together they have to make payment of the liability, or even individually they will have to pay the liability. Then comes the second part. Let us say out of four partners A, B, C, D, C retires today. Today is 25th of February. Now, how will C be liable? Answer is, first provision that is given in section 90 is that the partner or the firm, any one of them, has to intimate the commissioner by giving a written notice that see, from 25th of Feb, partner C is not our partner because the partner is exiting the firm. Now, if this notice is given, now to what period this notice should be given? So today is 25th of February. You can give it by 25th of March. That is within 1 month from the date of retirement. If let us say this notice was given on 15th of March, that is within 1 month, then the partner who has retired will not be liable after 25th of Feb, which is the date of his retirement. So he is liable for all liabilities of the firm up to the date of his retirement, but not for any liability which has happened after 25th of March. Sorry, 25th of Feb. That is the date of his retirement. So scenario one, that the intimation was given on 15th of March, which is within 1 month from the date of retirement. So partner is liable up to 25th of Feb, which is the date of retirement. Second scenario, the partner or the firm, none of them inform the commissioner about the retirement. And let us say either it is not informed or it is informed in August. So on 15th of August, they inform the commissioner that my partner C retired on 25th of Feb. Now this intimation is given beyond 1 month of date of retirement. Now, partner C, even though retiring on 25th of Feb, is jointly, severally liable for all the liabilities of the firm that may have accrued, that may have arisen till the date of intimation, which in my example is 15th of August 26. So, partners are jointly severally liable, but up to what date of the firm's liability? That is what is the key point in this case of retirement. Next is we have to discuss the provisions of GST in case a company is getting liquidated. Now see, once a company is getting liquidated, first, until the liquidation process is going on, we all know that the liquidator who is appointed by the court has to discharge the liability, and this will come under the statutory obligation of the company. So, what are the provisions under the GST law relating to liability at the time of liquidation? Yes.
Liability in case of company in liquidation, Section 88. Liquidator shall give the intimation of his appointment to the Commissioner within 30 days of his appointment. Commissioner may make such inquiry or call for such intimation as he may deem fit. Commissioner shall notify the liquidator the amount sufficient to provide for any tax interest penalty payable or likely to be payable by the company within 3 months of receipt of intimation of liquidator. If such tax interest penalty cannot be recovered from the company, every director during the period is jointly and severally liable to pay it unless he proves that the non-recovery cannot be attributed to any gross neglect, misfeasance, or breach of duty on his part.
Now, what is the procedure given? So whenever a company goes into liquidation and a liquidator is appointed, the liquidator has to inform within 30 days of his appointment to the commissioner that, see, boss, this company is now under liquidation and I am appointed as the liquidator. Now the commissioner is given 3 months by the law to determine the past period outstanding liability, if any, of this company. So now let us take example. The company has gone into liquidation on 1st of January, right? It had applied for liquidation. And today, that is 25th of Feb, I am appointed as the liquidator. Now, from today, within 30 days, I will have to write a notice, a letter to the commissioner, informing the commissioner that this company ABC Limited has applied for liquidation from effective from 1st of Jan 26, and today on 25th of Feb, I am appointed as the liquidator. Now, after this, the commissioner will intimate me the amount which is payable by the company, and now this amount becomes a statutory liability of the company. Now what is given? If the company pays off from the sale of its asset, fine. However, if such tax interest penalty cannot be paid by the company because the assets are short, then every director during the period is jointly severally liable to pay it unless he proves that non-recovery cannot be attributed to his gross neglect, misfeasance, or breach. So, if the assets of the company are not sufficient to pay off the liabilities, then now the responsibility will come on the directors. However, they are given this golden line of excuse or escape, that if they can prove that this non-recovery has no connection with them, they acted in the most prominent manner, they acted in the most honest manner, they acted in the most appropriate manner. And since the assets of the company itself were short, hence they could not be paid off, the liability could not be paid off. But there was no negligence, or there was no breach of duty on the part of the director. If this could be proved, then there is no liability on the director, and whatever is the balance liability, that shall lapse. So these are some questions, students, relating to the first topic, which is liability in certain cases, right? Now let us move on to our second topic for the day, that is offenses and penalties. Again, we have this question bank, and again, I will also open this again for going to let us recapitulate. So there is no let us recapitulate, I suppose, in this topic. No problem. We will study directly from the questions and answers, the provisions, and wherever required, we can go to the law again. Okay. Now, you get such type of straightforward questions also. So what is the question? What is the quantum of penalty for an offense which is either mentioned in 122(1), 1A, or 2? So let us go to the provision of this particular offense, which is mentioned in 122(1), 1A, and 122(2). Now see, there are two parts. Firstly, you should know what are the offenses under these sections, and then you can come to the amount of penalties that are prescribed for these offenses. So see, these are the penalties which are prescribed for offenses. Now under section 21, there are 21 offenses. However, this question that we read is not about the offenses. So in your answer, you cannot write the offenses names. Like here, you are given the names of the offenses as to what are the offenses under all these sections 122, 1, 1A, 2, etc. So see, this is 122, 1, and there are around 21 penalties or 21 different types of actions which are covered in this penalty provisions. Then there is 1A where only one type of action is, one type of default is covered or one type of offense is covered. So, but this is not asked in the question. The question asks what is the penalty amount. However, since we are revising, we'll first revise what are the different offenses. We will try to understand what fits in each of the offense. Then we will go to the answer. So since we are revising this point extra, though not asked in the question. Geeta, please read the offenses which are given.
Section 122 penalty for certain offences where taxable person who supplies any goods service both without issue of any invoice or issue an incorrect or false invoice with regard to any such supply.
So first is what is black marketing? What is black marketing? See, I am selling goods, but I am selling it without making an invoice, or I am selling it by preparing invoice which is undervalued. Now, generally people do this to avoid the tax. So first offense is you have sold good service, but either you have not given the invoice or the invoice given in is false. So you have used a lower value or you have purposefully classified it wrongly so that there is a lower tax rate. So offense is what? Actual supply has happened, but either no invoice or incorrect invoice. Now, next tool, we'll discuss two at a time. Yes, Geeta, second and third.
Issues an invoice or bill without supply of goods or service or both in violation of the provision of this act or the rules made thereunder. Third, collects any amount as tax but fails to pay the same to the government beyond a period of 3 months from the date on which such payment becomes due.
Okay. So what is the second and third offense? Second is exactly opposite of the first. In first offense, you sold the goods, but you did not prepare the invoice. In second, you have not sold any goods. So these are called as the fake invoicing transactions generally. So what is fake invoicing? I have not done any business, but still I am raising and giving invoice to you just to pass on the credit or to do some type of turnover movement. So without supply, I'm only issuing bills. So only issuing bills without actual supply of goods is what is covered in second case. The second offense is fake invoicing. First offense is black marketing. What is the third offense? Now, third is a very critical offense. Why? Because you have collected from the public any amount by name of tax. So you have prepared a bill where you have shown the value as 1 lakh and GST as 18%, and you have collected 1 lakh 18,000. So you have collected some amount by the name of tax. Now, once you collect an amount by the name of tax, you should compulsorily pay to the government because it is not your money, it is the government's money. But you fail to do it. And that failure is going beyond a period of 3 months. So where the failure is beyond the period of 3 months, in such cases, you will have to now means the department will be now imposing a penalty and you will have to even pay the penalty which you are going to study later. So what is important is here you have collected an amount by the name of tax. This is very, very critical, right? Next to beta.
collects any tax in contravention of the provision of this act but fails to pay the same to the government beyond a period of 3 months from the date on which such payment becomes due, fails to deduct the tax in accordance with the provision of section 51(1) or deducts an amount which is less than the amount required to be deducted under the said subsection, or where he fails to pay to the government under subsection 2 thereof the amount deducted as a tax,
Next one also.
fails to collect tax in accordance with provision of section 52(1) or collects an amount which is less than the amount required to be collected under the said subsection, or where he fails to pay to the government the amount collected as tax under section 52(3).
So now first I'll talk about these two offenses. So clause 5 and clause 6 cover very simple provision. So in GST, you have one TCS and one TDS. In income tax, you have multiple TDS and multiple TCS provisions. Here you have one. So only one transaction comes in TDS and only one transaction comes in TCS. One transaction means one category. Now, let us say you are supposed to deduct TDS, but you either did not deduct the TDS, or even worse, you have deducted the TDS. So now again you are having government money, but you have not deposited the TDS with the government. Similarly, you are liable to do TCS under GST, but you failed to do the TCS, that is collect tax over and above the sale value, or even worse, after collection you have not paid. Then in clause 4, now interestingly, clause 3 was you have collected the correct amount of tax and not paid. Clause 4 is you have collected tax in contravention of the provisions and not paid to the government. Now you'll say, sir, what is the difference between 3 and 4? So let us say my goods are leviable to 18% GST or my services are leviable to 18% GST, and I collected that from you but did not pay to the government. This is offense number 3. What is offense number 4? Offense number 4 is I have collected tax which was not leviable. So let us say the service which I am providing is exempt, but still I have charged 18%. So I have collected tax and it is in contravention. Means what? It is not as per the provisions. So either where it is exempt, still I am charging GST, or the GST should have been 5%, I have charged 18%. So these are the cases where I collect wrong tax. Now in 3 and 4 both, one thing is common, whether you have corrected the right tax, which is 3, or the wrong tax, which is 4. Whatever you collect, so like mainly in case of 4, people will say, okay, I've collected wrong tax. I will refund this back to the person from whom I've collected. No, not allowed. Even though you have collected wrong tax, which is not as per the provisions, you directly cannot refund it to the person from whom you have collected. You will have to return it or give it to government and let that person file refund application with government. So clause 4 and clause 3 are common points dealing with that where you have collected tax. The only difference between the two is whether it is a right tax or it is a wrong tax. Now, the maximum time period given in the law is within 3 months you have to deposit this with the government. If you fail to do so, you have to pay penalty. Fine. Now, above pointers were relating to collection of tax and non-payment or non-deduction of TDS or non-collection of TCS and further non-payment. Now we come to some more types of offenses. Yes, Geeta, please read the next 4.
Takes or utilize input tax credit without actual receipt of goods or service or both, either fully or partially, in contravention of the provision of this act or rules made thereunder. It fraudulently obtains refund of tax under this act. 9. Takes or distributes input tax credit in contravention of section 20 or rules made thereunder.
Next.
Falsifies or substitutes financial records or produces fake accounts or documents or furnishes any false information or written with an intention to evade payment of tax due under this act.
Now, what are these four punishments? So first is, now it is relating to ITC. Either you have taken wrong ITC, so ITC was not available. Why? Because it was blocked under 17.5. Or you have taken a correct ITC, but while utilizing, you have utilized it wrongly. Now, how you utilize wrongly? So you got ITC of 100, but you utilize 150. Or you have utilized wrongly means you should have utilized C against C, but you have utilized it against S. So either wrong taking or wrong utilization. Now, what is interesting is when this particular provision will trigger when this is done without actual receipt of the goods or service. So like how we had fake invoicing, where there was no sale, still you were giving the invoice. Now continue to that provision. So that provision was from the supplier side. So there is no actual sale, but the supplier gave invoice. Now it is on the recipient side in this provision. The same fake invoice which you receive from the supplier, you have taken or utilized the credit on that. So in such cases where you have wrongly taken the credit or utilized the credit, and it is arising from what? From such a transaction where there was actual no receipt of goods or service. So there was no supply by the supplier. So this is a case of fake invoicing. So the same case was covered above from the supplier side. Now the same case is covered here from the buyer side. Next, where you have applied and taken refund wrongly, fraudulently. Now this is important. Where it has been done fraudulently. Next, now this is relating to input service distributor. Now, input service distributor is your head office, which receives common credits and it has to distribute the common credits to its other branches. Now, either the head office has taken wrong credit or distributed wrong credit. And what is wrong means what is in contravention of the provisions of this act, that is section 20 and the rules. Next is where you are producing false records, false accounts. So many times when the department comes for audit or the department demands you to give your books of accounts for checking and you give them wrong books of accounts purposely, or you give them fake documents, fake evidences. In such cases, it will amount to offense. Yes. Next four, beta.
Is liable to be registered under this act but fails to obtain registration, furnishes any false information with regard to registration particulars either at the time of applying for registration or subsequently, obstructs or prevents any officer in discharge of his duties under this act, transports any taxable goods without the cover of documents as may be specified in his behalf.
So now these are more of procedural, you can say offenses. So first is you cross the turnover given in section 22, which is required for registration, or you enter into any of the transactions mentioned in section 24. So 22 and 24, these two sections put down the requirements when a person is required to be registered. So you satisfied either 22 or 24, that is you become liable for registration, but you do not register. So this is the offense. Next, you have given false information when you applied for registration. So let us say you are having 4 or 5 branches, but you purposefully did not give 2 branch details. You only gave branch details of the other 3 and 2 you hid from the department. Next, whenever an officer is trying to discharge his duty, so let us say an officer has come to your premises for audit or officer has come for some search or investigation, and you are not allowing the officer to carry out the functions which the officer is empowered to, like you are not allowing the officer to check the books, or you are not cooperating with the officer, or you are preventing the officer to enter your premises or go to your godown or check your stock. All these are obstructing the officer from discharging his duties under the act. Then you are transporting goods without proper documents. Now, what are the documents? If it is a sale transaction, the document is invoice. If it is a no sale transaction, the document is delivery challan. Plus, along with this, you should have prepared e-way bill if it is applicable. Now, either the document, that is invoice or delivery challan, is missing, or either e-way bill is missing. So whenever you are transporting any goods without the cover of documents like invoice, like e-way bill, again it tantamounts to an offense under this particular clause. Yes.
Suppresses turnover leading to evasion of tax under this Act. 16. Fails to keep, maintain, or retain books of account and other documents in accordance with the provision of this Act or the rules made thereunder. 17. Fails to furnish information or documents called for by an officer in accordance with the provision of this Act or the rules made thereunder, or furnishes false information or documents during any proceedings under this Act. 18. Supplies, transports, or stores any goods which he has a reason to believe are liable to confiscation under this Act.
Read next three also.
19. Issues an invoice or documents by using the registration number of another registered person. 20. Tampers with or destroys any material evidence or document. And 21. Disposes of or tampers with any goods that have been detained, seized, or attracted.
Okay. Now, what are these offenses? Now, see, again, we come back to critical offenses. In between, we had some procedural offenses. You did not get registered, you did not maintain proper records, or you did not provide proper documents. Now, you suppress your turnover. Now, see, this is the common type of tax evasion measures with which many businesses do. So, your turnover is 200 lakhs, but you purposefully report only 150 lakhs. So you are trying to suppress 50 lakhs of turnover. Obviously, the direct purpose is, so if you are showing less turnover, you have to pay less tax. Next, whatever records, documents you are maintaining, you have to maintain it in a proper manner and for a specified period. However, you failed to maintain or retain the books of accounts as per the provisions. So, whatever documents were required to be maintained, you did not maintain them, or you are supposed to maintain it for a specific period of time. So, you failed to do any of these things. Again, this is a procedural error. Another procedural error is you failed to furnish information or document when it was asked by any officer. So at the time of audit or at the time of any inquiry, when you were supposed or you were asked by the officer to provide any information or document, you did not provide. Or even worse, you gave a false information. So in any case, it tantamounts to offense. Next, where you know that certain goods are liable for confiscation. Now, when goods are liable for confiscation, that is again a different set of offenses. Now, you know that the goods are liable for confiscation because some offense has been committed on those goods. Still, you are further selling them, you are transporting them, you are storing them. So you are knowing that these goods are offense goods and hence they are liable for confiscation. Despite of knowing this fact, it means indirectly you are also participating in the offense of the goods by further supplying or selling it, by transporting it as a transporter, or by storing it as a godown or a warehouse keeper. So despite of knowing that these goods are offense goods, confiscation liable goods, still you are doing some act with those goods. Next, now this is a very serious crime. You are giving invoice by writing the registration number of some other person. So when you are issuing invoice by not using your registration number but somebody else's number, this is a very, very big crime. Next, you are tampering with or destroying evidences or documents, or you dispose of or tamper with goods that have been detained. So, at the time of search, many times the authority are giving the order or passing the order that the goods have to be detained or seized. But despite of that, you are disposing of, that is maybe selling it or shifting the goods to another place. So that will again amount to offense. Now, we had to decide the quantum. What is the quantum? How much is the penalty payable? Please read. Geeta, please read the penalty. Geeta, your voice is not audible. Is there a problem at your end with the mic? Okay, can you read Geeta or should I read out? Okay, so in respect of all the above 21 offenses, what is the quantum of penalty? So the law says he shall be liable to pay penalty, which is minimum 10,000, or the amount which is equal to the amount of tax evaded, or the tax not deducted or short deducted or not paid to the government or not collected or short collected and not paid to the government, or the ITC availed or passed on or distributed irregularly or the refund claim fraudulently, whichever is higher. So in short, minimum 10,000 is the penalty. So in all those cases where only procedural lapse has happened, there is no evasion of the amount of tax. In those cases, 10,000 is the penalty. And in all other cases where there is some amount of tax or ITC involved, it is the amount of tax or ITC, and out of both, whichever is higher. In short, 10,000 is the minimum penalty under subsection 1. Now we go to the second offense, which is under subsection 1A. Now from the section number 1A, you can understand that this offense was not there originally in the law. It is added later on. Now, why it is added, that you will come to know when you read this. So what it says, any person who retains the benefit of the transaction, which are covered in the above clauses 1, 2, 7, 9, and at whose instance such transaction is conducted, shall be liable to a penalty of an amount equivalent to the tax evaded or ITC passed on. Now, 1A has been inserted to penalize the masterminds. Now, many times what happens? There is a mastermind who is actually planning the entire fraudulent transaction, but the transaction is done by some other person. So let us say I am the mastermind. I bring 4 or 5 people together. I give them instructions that, okay, let us plan the transaction in such a manner so that you will get this benefit. You all are doing the transaction. Let us say it is a fake invoicing transaction. Now you all are doing the transaction. So you all are getting covered in section 1, that is, sorry, subsection 1 of section 122. And I am, who is the mastermind, is getting covered under subsection 1A. But what is very important in subsection 1A is I should have got the benefit of the transaction. So the lawmakers have to prove that in order to fit me in 1A, I should have got the benefit of these fraudulent transactions, which are covered in clause 1, 2, 7, 9, etc. These are all cases of fake invoicing or undervaluation, or the case where you have sold goods but not prepared invoice. In all these cases, the person or the taxpayer who has done that is covered in subsection 1, and the mastermind who has planned all this and got all this done from the taxpayer or taxpayers, that person is covered under subsection 1A. So this 1A is introduced to target or to make the masterminds liable. Correct? Now we come to 1B. Now for 1B, what are the offenses? Now this 1B, again, as you can see, the number 1B means it was not there originally in the act. It has been added later on. Now this is relating to electronic commerce operator. Now students, you all know who is an electronic commerce operator. It is the online websites through which we normally order goods and services, right? Now this subsection 1B has been introduced to put the electronic commerce operator, that is the ECO, on check, because now these offenses will be penalized to the online apps. So let us say you are buying something from Myntra or from Amazon or any of these online apps, Flipkart, etc. So this section covers these apps, that is Flipkart, Amazon, all these are covered under this section. Geeta, is it possible for you to read now?
allows a supply of goods or service or both through it by an unregistered person other than a person exempted from registration by a notification issued under this act to make such supply. Second, allows an interstate supply of goods or service or both through it by a person who is not eligible to make such interstate supply. Or third, fails to furnish correct details in the statement to be furnished under Section 52(4) of any outward supply of goods effected through it by a person exempted from obtaining registration under this Act shall be liable to pay a penalty of 10,000 rupees or an amount equivalent to amount of tax involved had such supply been made by a registered person other than a person paying tax under Section 10, whichever is higher.
So see, what are the offenses? So I am the online app. I am, let us say, Amazon. Now there is a provision under section 24, which is a registration provision, which says that whoever wants to supply through online app, that businessman, that trader, that supplier should get registered. Now see, that is the responsibility of the businessman. But now there is a cross responsibility put on the online app. What is this responsibility? That the online app also should not allow an unregistered person to register on the app. It means these online apps should first take the registration certificate from all the suppliers who want to register themselves on the online app. Only then they should allow them to do transaction through the online app. Now let us say just online app, let us say Flipkart, is allowing me to sell my goods through Flipkart and I have not taken a GST registration. I am anyways responsible, but I am responsible under subsection 1 because I was liable to take registration, but I did not take registration. I committed offense by not complying with section 24. So for me, 22, section 122 bracket 1 is applicable. But for the e-commerce operator, since I am not registered, the e-commerce operator is also at fault because it has allowed me to do transaction through the app. Now it knows the law is very clear in section 24 that any supplier who wants to supply goods through the app has to get registration. Now, if I am not getting registered, it is my mistake. Plus, the app who is allowing me to sell goods through the app, it is also their mistake. Now, only where I'm exempted from taking registration via notification. So there is a specific notification issued under section 23 where certain suppliers are exempted. If I'm falling in that, then that is a different question. But again, I'll have to first give that detail to the e-commerce operator. And again, the responsibility of the e-commerce operator to check whether actually I am exempted from registration. Only then I, an unregistered supplier, should be allowed by the e-commerce operator to sell through its app. If the e-commerce operator is allowing an unregistered supplier without falling in the exemption notification, then it will be a problem for the e-commerce operator also. I am anyways at fault. E-commerce operator is also at fault. Second, what is the second liability or the offense that can be committed? So e-commerce operator is allowing interstate supply. By whom? By a composition dealer. Now, a composition dealer cannot make interstate supply. Now, this composition dealer, if it is getting registered on an online app, so let us say I am I am a supplier of shoes. So I am a footwear supplier and I'm covered in the composition scheme because my turnover is within the limits. I can register on the e-commerce operator. That is, I can register myself on Flipkart and Amazon. But then section 10, which is the section for composition scheme, puts a restriction on me that I cannot supply interstate. So normally also I cannot supply and through e-commerce operator also I cannot supply. Now again, it is the responsibility of the e-commerce operator also under this subsection to ensure that a person who is registered as a composition dealer is not selling outside the state. If I sell outside the state, that is, it is an interstate supply, I will be penalized. That is a different thing. But at the same time, e-commerce operator will also get penalized. Then comes clause 3. Fails to furnish correct details. Now, where Now, since e-commerce operator is covered under 52, 52 is the provision for TCS. As I said, there is only one TDS which is to be done by government, and there is only one TCS which is done to be done by e-commerce operator. So these are only one provisions under GST law for TDS and TCS. Now here, e-commerce operator is required to collect tax and deposit it with the government and then file the return of TCS. Now, if at the time of filing returns, if the e-commerce operator has given incorrect details, that is, it has failed to give correct details, then this will again be an offense, liable or penalty. And then what is the penalty? Same, minimum 10,000 or the amount of tax involved, whichever is higher. Now coming to the other part of the question. This was also part of the question from where we started. Now this is a very critical offense, which is under 122 bracket 2. Please read, beta.
Any registered person who supplies any goods, service, or both on which any tax has not been paid, short paid, erroneously refunded, or where input tax credit has been wrongly availed or utilized. A. For any reason other than the reason of fraud or any willful misstatement or suppression of facts to evade tax shall be liable to penalty of 10,000 rupees or 10% of the tax due from such person, whichever is higher. For reason of fraud or any willful misstatement or suppression of facts to evade tax shall be liable to penalty equal to 10,000 rupees or tax due from such person, whichever is higher.
Now, what is this subsection 2 penalty? Now, see, if you recall subsection 1 is you give invoice without supplying good service, or you supply good service but don't give invoice, or you give wrong invoice, or you take and utilize wrong credit without actually receiving the goods or service. So subsection 1 was covering any type of wrong, or I will say willful breach of law. But subsection 2, why this is a very important section, this need not be a willful breach, even where you have erroneously done something. And because of that, your tax is either not paid or it is short paid. Then, in cases where there is no involvement of fraud or willful misstatement suppression, still you'll have to pay a minimum penalty of 10,000 or 10%, whichever is higher. So in no fraud cases, your minimum penalty is this. And in fraud cases, your minimum penalty is 10,000 or the amount of tax evaded, whichever is higher. So where in the regular course, when they are doing your assessment, if during that time they find that you have not paid any tax or short paid any tax, they can invoke section 122 bracket 2 penalty. So this is what is critical about this, right? Just give me a minute. Yes. Now, what is subsection 3? Now, subsection 3 is dealing with those type of offenses where you are supporting someone in the offense. So, the person who has committed the offense is covered in subsection 1. The person who is the mastermind is covered in subsection 1A. And the supporter, all those people who these people who help them, they are covered in subsection 3. Geeta, please read.
Sir, want to ask one question.
Please.
So this fraud case and non-fraud case are there in 74A also. What is the
Yes.
difference between this penalty and that penalties, and for which purpose this is levied?
See, you have raised a very prominent question, Geeta. Now, see, actually, there is a lot of dispute going on that when 74 itself, because what you are reading the penalty over here, 10% and 100%, this is what is already provided in the old section 73, 74 or the new section 74A, correct?
Yes, sir.
Now, interestingly, why this is repeated over here? So basically, actually 73, 74, these are machinery provisions. And 122 is the penalty provision. Now you'll say, sir, what is the difference? See, 73, 74 main purpose is of 73, 74. The main purpose of 73, 74 is only to provide the mechanism in which the officer will issue show cause notice and do the entire adjudication process. Obviously, while doing that, 74 refers that the officer will collect the tax, the interest, the penalty. Now, interestingly, my understanding of the law is they should have in 73, 74 written penalty under 122 because this provision is there in the law which is specifically made for that scenario only. Now you will say, sir, then why this 122 is there separately? Because 74 is not referring to 122. It is simply giving the same penalty which is given over here. I believe the reason why 74 also separately does and 122 also does. So understand this. 74 generally triggers whenever there is some non-payment of tax. Now let us say you paid the tax later. So you committed the offense, but you yourself paid the tax. Now, when you have yourself paid the tax, interestingly, 73, 74 or this new 74A generally do not triggers because 74 or 73 or 74A heading when you read, it is mainly triggering whenever there is short payment of tax or non-payment of tax. So let us say you originally committed some offense. Later on, before the department started 73, 74, you went and paid the tax. So technically, now the department cannot invoke 73, 74. So for such cases, I believe there is 122 where the officer now can directly come to 122 and say that, okay, now there is no tax payment pending. So I cannot now start proceedings under 73, 74. But for penalty, since there is an independent section, I can start the proceedings under 122. So this is what is the difference, beta. So where tax is also pending, it can be demanded under 73, 74. Where tax interest is paid, then the invocation can be under section 122. This is my understanding or the homogeneous reading of both the provisions. Is this clear, Geeta?
Yes, sir. Clear, sir.
Perfect.
Sir.
Yes, let us proceed. Subsection 3.
It means no use of that 74. If penalty is not paid, you can captured in this section.
Yes. So in other words, 74 or 73, when it can be used, when tax is also not paid. So as I gave you
Yes.
example, see,
Yeah.
in 23, 24, I committed one of the offenses which are mentioned above, and I did not pay the tax or I short paid the tax. However, later on, when I got some information that the department will come and catch me, before the department started any proceedings, or the department only sent me a simple notice or letter, not notice, sorry, letter, asking me to provide details. Now I got afraid. So what I did, I paid the tax interest. Now, in such cases, technically the department now cannot invoke 73, 74 or 74A. So for such cases, directly they can invoke 122 and at least take the penalty. Correct?
I understand.
Please go ahead.
Any person who aids or abets any of the offences specified in clause 1 to 21 of subsection 1 B acquires possession of or in any way concerns himself in transporting, removing, depositing, keeping, concealing, supplying, or purchasing, or in any other manner deals with any goods which he knows or has reason to believe are liable to be confiscation under this act or rules made thereunder. C. Receives or is in any way concerned with supply of or in any other manner deals with any supply of services which he knows or has reason to believe are in contravention of any provision of this act or the rules made thereunder. D. Fails to appear before officer of central tax when issued within a summon for appearance to give evidence or produce document in an inquiry. E. Fails to issue invoice in accordance with provision of this act or the rules made thereunder, or fails to account for an invoice in his books of account, shall be liable to penalty which may extend to 25,000 rupees.
So, what is this provision? So, this provision is, you can say, a reduced penalty provision. Now, interestingly, what it covers? It covers the person who abates or aids any of the offenses. So, as I said, the main offender is in subsection 1. The mastermind is in subsection 1A. These are the people who directly, indirectly get involved in the offense. So, they are not actually committing the offense, but they become part of the offense. Like, let us say, I was filing returns of that person. Now, I have not committed the offense, but the person who has committed the offense, I was the accountant of that person, or I was some way concerned with the filing of returns of that person. In such cases, the department may include me in subsection 3, saying that I also aided or abated. How I aided or abated? By not stopping the person from committing the offense, I aided or abated in the offense. Similarly, if I am, let us say, buyer of those goods. Now, if I am buyer of those goods, I may not be further selling it, but even if I simply buy or in any way concerned in transporting, removing, depositing, concealing the supply of goods where I know that the goods are liable for confiscation. So let us say somebody comes and tells me, "Ki see boss, these goods have come to me. Let us say ये चोरी का माल है." Many times, see, you know, people, the employees inside a factory or someone do these type of thefts where the employees, they what you say, fraudulently they remove some goods, and even the company is not knowing that the employee has done any such type of theft. Now such goods comes to me. Now I am not the original supplier or buyer, but I am someone who is a third party, and I come to know that these are the goods which were originally, you can say, theft done by some of the employees or internal person, and that goods are coming in the market. So we generally call it as black market or a chor bazaar. So if I go and buy goods from there, then I will come in clause B. Or let us say I help them in transporting the goods, or I keep their goods, or I hide their goods, I will come in clause B. Similarly, in clause C, again I am receiving or in any way concerned with supply of those services which again I have reasons to believe are in contravention of any of the offense. So again, I am recipient of a service for which again billing has not been done. So in this case, if you see, generally in clause B and C, the final consumer is coming. Now, again, there is some service which I take without the opposite person raising proper invoice. And I agree to that because it is my benefit also, because I am the end consumer. I know, like, let us say I go to a hotel, I stay in a hotel, and I know that anyways, since it is my personal use service, I will not get the credit. Hence, when the hotelier says that, okay, I will give you a lower amount invoice, I agree to that. So in any ways, despite of knowing that there is some contravention of the provision, I still receive such type of service. I get covered in C. Next, if summons are given to any person and the person does not appears or fails to issue invoice in accordance with the provisions of this act, so whatever are the provisions, the requirement, you have not mentioned the correct details on the invoice or the invoice is not signed, any of those conditions which are given in the law are not fulfilled. So you have issued invoice, but the invoice is not having correct or complete details. In such cases, since there is no direct intention or direct involvement in any type of fraud or offense, hence the penalty is limited up to 25,000 rupees. So this is how various penalties are quantified in the law in section 122. So these are 122 offenses and penalties, right? Now let us come to some other offenses and penalties. So penalty for failure to furnish information. Now there is a specific in annual information return which certain organization like banks, registrar of properties, all these people are supposed to provide to the government. If they fail to provide that particular, if they fail to file that information return, that is to provide the information, they will be coming here. Next, fine for failure to furnish statistics. Again, different provisions of the Act have required certain departments, certain officers to provide certain type of information or statistics of certain data. If those officers fail to provide those statistics or information, they will be liable to penalty. Now we come to again two very important provisions of penalty. 125, which is the general penalty, and 126, which is some discipline. So this is, you can say, like a protection to the taxpayer from penalty. So let us read both these in detail because these are the other two sections which are very important in the penalty provision chapter. Then this chapter, you can say, will be completed. Yes, beta. Please read 125, general penalty.
Any person who contravenes any of the provision of this Act or any rules made thereunder for which no penalty is separately provided for in this Act shall be liable to penalty which may extend to Rs 25,000. Penalty amount is discretionary in nature and hence it depends upon the nature of the offence and its severity. Mere contravention of any of the provision of the law will not result into penalty of 25,000 always. The gravity of offence should be considered. General disciplines related to penalty as given in section 126 are to be considered by proper officer while imposing the penalty under section 125.
So see, 125 is like a residuary penalty. So they have called it as general penalty. You can also call it as a residuary penalty. Why? What it says. So you studied entire 122. Now 122 has listed out different types of offenses done by the main offender, by the mastermind, by people who abet or help them. So for all of them or for those specific provisions, penalty has been provided. Now let us say if for some offense penalty is not provided, then you will come under this section. So this is that residuary penalty. So where the law has not made any specific penalty provisions, but still the law has this penalty provision. Why? Because you may commit so many different breaches of the law. Like there are so small requirements in registration, in time of supply, in place of supply, in issue of invoice, in maintenance of books, which may not be covered above. So if you commit any type of breach, that will be covered here. Now coming to the most important section according to me, which are general disciplines relating to penalty, whereby some exceptions you can say are given from levy of penalty. So these come as a shield for the taxpayer. So whenever any penalty is to be imposed, these will act as a shield. Please read better.
General disciplines related to penalties, Section 126. The levy of penalty is subject to certain disciplinary regime which is based on jurisprudence, principles of natural justice, and principles governing international trade and agreements. Such general discipline is enshrined in Section 126 of Act, according to which, first, no penalty shall be imposed by any officer under this Act for, first, minor breaches of tax regulations or procedural requirements of law, or any omission, mistakes in documentation which is easily rectifiable and made without fraudulent intent or gross negligence.
So in these three cases, the discipline is saying that you should not levy penalty. So these are like defenses of the taxpayer. So whenever any penalty is levied, you can take these defenses. First, it is minor breach. Now, what is minor? See, minor means one, where no huge amount of tax is involved. Two, where the you can say, like for example, I prepared the entire invoice. I only wrote the wrong HSN, but it is not changing the tax rate. The tax rate remains same. But many times while writing the HSN, the digits of HSN I have written by changing the digits, which is a minor breach. What is minor? So either in terms of amount, or second, where it is not a breach which is affecting the amount, but it is like where some clerical mistake. That is what is minor breach. Second is procedural breach. Now, what are procedural breach? Like, let us say, taking registration, maintaining books, filing returns, preparing invoice. These are all procedural provisions. Now, please understand, there is a difference between I not preparing invoice with intention to evade tax and I missing to prepare invoice in time, getting late by a few days. Similarly, filing return late. See, filing return late need not always be a very grave offense which can be covered in 122(1), because I am not having intention to evade tax. But let us say for genuine difficulty, there is some there is a major medical issue at my end, or let us say there is a function at my end, and because of that I get late by 1 week, 10 days in filing the return. These are procedural breaches. Yes, here maybe the tax is getting delayed, but anyways I'm going to pay interest. Now these things cannot be a reason for imposing penalty. Next, any omission or mistake in the document which is easily rectifiable and made without fraudulent intent. So as I was saying, in invoice, I have written wrong HSN, but it is not changing the tax rate. Yes, because of writing wrong HSN, the detail furnished are wrong, but it is a rectifiable mistake. It is not a grave offense. Now, as per explanation to 126.1, sorry, please read, Beda.
As per explanation to Section 126(1), first, a breach shall be considered a minor breach if the amount of tax involved is less than rupees 5,000. Second, an omission or mistake in documentation shall be considered to be easily rectifiable if the same is an error apparent on the face of the record.
So they have tried to explain the above 2 points. So in above 2 points, they have said for minor breaches, penalty cannot be levied. So here they have tried to give the amount. So what could be considered as minor? So they have said where tax amount involved is not more than 5,000. And second, what could be considered as mistake in the documentation where the mistake is apparent from the face of the record. So as I said, on the invoice, I have written wrong HSN, but it is not impacting tax rate. I have written, let us say, some wrong address, wrong PIN code, or let us say the invoice number is wrongly typed. So these are errors which are rectifiable and which are apparent from the records. These prove that I did not have an intention to give wrong information, or I'm not trying to camouflage any details, or I'm not trying to suppress any details. So these things will come under minor breaches or procedural breaches for which penalty should not be levied. More disciplines. Please read.
The penalty imposed under this Act shall depend on the facts and circumstances of each case and shall be commensurate with degree and severity of the breach. No penalty shall be imposed on any person without giving him an opportunity of being heard, issue of show cause notice, or proper hearing in the matter, affording an opportunity to the person proceeded against must be rebut the allegations levelled against him. Offer under this act Officer under this act shall While imposing penalty in an order for breach of any law, regulation, or procedural requirement, specify the nature of the breach and the applicable law, regulation, or procedure under which amount of penalty for breach has been specified. When a person voluntarily discloses to an officer under this Act the circumstances of breach of tax law, regulation, or procedural requirement prior to discovery of the breach of any officer under this Act, proper officer may consider this fact as a mitigating factor when quantifying a penalty for that person. Provision of this section shall not apply in such cases where penalty specified under Act is either a fixed sum or expresses fixed percentage. For instance, penalty under Section 125 is being prescribed as up to 25,000 means neither a fixed sum nor a fixed percentage. Hence, general discipline given under 126 should be considered while imposing any penalty.
So see, what are these pointers saying? That firstly, whenever you are imposing penalty, kindly keep the facts and circumstances in mind and let the penalty be commensurate. Commensurate means matching. So it should not happen that for minor breach you are imposing a very heavy penalty of 1 lakh. That should not happen. Second, most important, like how it is given in 73, 74. Whenever you want to do recovery of tax, you have to issue SCN. Similarly, whenever you have to even levy penalty, and as we say, as we were discussing, 73, 74 is not there because there is no tax evasion. Tax has been paid, but now you want to levy penalty. You should compulsorily issue invoice and provide proper hearing. Next, important point is that whenever the officer is imposing any penalty, he should specify the nature of breach and the applicable law. So again, the officer has to mention what is the nature of my offense, what wrong I have done, and it is wrong as per which provision of the law, so that the recipient, or recipient means the person on whom this notice is issued, will be in a position to defend by giving proper reply. Next, very important point, where the person himself has voluntarily disclosed to the officer that I committed this particular breach. In such cases, the officer should consider this fact as a mitigating factor when quantifying the penalty. In short, in such cases, he should minimize the amount of penalty. Further, now this is important. The provisions of this section will not apply in such cases where the penalty specified under the Act is either a fixed sum or expressed as a fixed percentage. For example, penalty under 125B is being prescribed up to 25,000 means neither a fixed sum nor a fixed percentage, and hence general discipline under 126 should be considered. So for all those penalties where directly the penalty is giving one amount fixed, that okay, this is the compulsory amount, then these principles what we studied are not applicable. Fine, students. So we will stop over here. So we have completed 2 chapters today. We have 3 more small chapters to be done. So now after 15 minutes break, we will rejoin and then we'll complete those 3 chapters in the later part of our today's session. Fine. So let us have a 15 minutes break.
Yes.
Let us go to the next provision, which deals with filing of appeals. So now the provisions are relating to appeal and revision. So let us again go back to the question answer format for better understanding. So what is the first question? Does CGST law provide for any appeal to a person aggrieved by an order or decision passed against him by adjudicating authority under the CGST Act? Explain the related provisions. So the question is, what are the provisions relating to the first appeal? So first appeal is against the order of the adjudicating authority. Now see, first you should know the structure of appeal. So firstly, show cause notice is issued by the officer. Adjudicating order is passed against the order of the officer. Adjudicating order is passed by the officer, and against the order of the officer, you can either go in for rectification to the same officer or you can go in for appeal. Now, the first appeal is appeal with commissioner appeals. So, commissioner appeal is your first appellate authority. And thereafter, after the commissioner appeal, here's your appeal. The next step is going in for tribunal. So this is the first step, section 107, that is appeal to the appellate authority. Now, what was the question? The question was, does CGST law provide for an appeal to a person aggrieved by the order or decision passed against him by adjudicating authority? Answer is yes. What are the relevant provisions? So let us read the provisions. Yes, Geeta, can you please read?
Yes, sir. This answer only, no, sir?
Yeah, sir.
Yes, any person aggrieved by any order or decision passed by an adjudicating authority under the CGST Act has the right to appeal to the appellate authority under Section 107. Appeal should be filed within 3 months from the date of communication of such order or decision. However, appellate authority has the power to condone the delay of up to 1 month in filing the appeal if there is sufficient cause for the delay. Appeal can be filed only when the admitted liability and 10% of disputed tax amount subject to maximum of 20 crores, 40 crore in case of IGST, is paid as a pre-deposit by the appellant. However, no appeal shall be filed before EA against an order under Section 129(3) unless a sum equal to 25% of penalty has been paid by the appellant. Further, no appeal can be filed against the following orders in terms of Section 121. First, an order of commissioner or other authority empowered to direct transfer of proceedings from one officer to another officer, order pertaining to seizure or retention of books of accounts, register and other documents. C. An order sanctioning prosecution under the Act or an order passed under Section 80, payment of tax and installments.
So students, this is the most important part which you should learn, because these are those orders for which there is no appeal possible. So these are also called as non-appealable orders. Just make a note of this. Now these are given under section 121. What does 121 says? For which orders you cannot file any appeal? One, where the order is passed by the commissioner. For what? For transferring the proceedings from one officer to another. So internally, the commissioner or maybe any other superior officer is given the power by the act to internally transfer the case from one officer to another. You cannot challenge this. This is a non-challengeable, non-appealable order. Second, where they have passed an order relating to seizure of books or retention of books. So where your books are ordered to be seized, you cannot file any appeal against that order. Next, order sanctioning prosecution, that is arresting you or any such order, cannot be challenged. And an order passed under section 80, that is payment of tax in installment. So where you request the commissioner to allow you to pay the outstanding tax in installment, whatever order the commissioner passes, whether allowing, not allowing, partly allowing, for such orders, you cannot go in for appeals. Now, accepting these four orders, for all other orders, appeal can be filed. Now, firstly, we are talking about the first stage appeal. First stage appeal is appeal with the appellate authority, who is generally the DC or the Commissioner of Appeals. Now, this is under section 107. The time limit given is 3 months. Now, important is 3 months from which date? The law uses the word from the date of communication of such order. Now, interestingly, even though the law has used the word communication, nowhere in the act they have defined what is communication. So, see, if you go to income tax law, there are two words used whenever time limit for doing any type of action is given. One is date of issue of something. Second is date of service of something. So let us say we have to say that you can file appeal within 3 months from the date of issue of order or date of service of order. Now here GST law has gone a step further. It is saying communication of order. Now what is the difference? See, when it says date of issue, it means the date on which the department has sent the order from their side, issued the order. Second is date of service of order, the date on which the order is received by you or the letter of containing the order is posted to your address. That is date of service of order. However, GST law has neither used the word date of issue, date of service, rather it is using the word date of communication. Now, as I said, this word is not defined in the GST law. Also, it is not used in the other laws. So the question is, what exactly is communication? Now, of late, there are some recent judgments where the courts have said that communication is not completed only with service. So let us say a letter is posted to you or an email is sent by the department to you. This is not communication. This may be either issue or service, but it is not communication. Communication is said to be complete only when you read that order, when you come to know about the passing of the order. So in case, let us say some mail is sent, but it is not yet opened by you. In case a letter is delivered at your address, but it is still kept unopened, then it may still not amount to communication. However, since as I said, there is no decision either in GST law or not, this particular point is not used in other laws. Hence, getting the final answer as to what exactly will be considered as communication, this will take some time. But for the time being, the courts are saying communication has to be when you read the order. So within that date, 3 months from that date, you are supposed to file the appeal. Now let us say 3 months cross. You are allowed a further period of 1 month. But this is the condonation period where you can file appeal in this fourth month, if I can say so, provided the authority condones your delay. So 1 month is the condonation period, but this is subject to the approval of the authority. Next, when you are filing this appeal, you have to first deposit some amount. First, what you have to deposit? Whatever liability you have accepted. So let us say order was passed on 5 different issues. Out of 5, you are accepting 2 issues and you are contesting 3 issues. So for the 2 issues which you are accepting, you have to pay the full amount of liability, that is tax, interest, penalty. For the 3 issues which you are disputing, you have to deposit 10% of the tax portion, only tax, not interest, penalty, right? Now there is an amendment in this. In case the order passed is only the order for penalty, like what we were discussing, it is passed under 122 directly. In such cases where the order is only for penalty, then the 10% has to be paid of the penalty portion. But where the order is of tax, interest, penalty, all things, in that case, you have to pay 10% only of the disputed tax portion. And then there is an upper cap of 20 crore CGST, 20 crore SGST, or if it IGST, 40 crores. Now, appeal which is filed against an order under section 129(3), which is relating to e-way cases, cannot be filed unless a sum equal to 25% of penalty has been paid. So these are the provisions relating to filing of appeal against the first stage, that is the order passed by the adjudicating authority. Next, describes the provision relating to departmental appeal to appellate authority under 107. Now, interestingly, you file appeal, that is understandable. But can department also file appeal under 107? That is an important question. The answer is yes. Even the department has powers to file appeal. Now, what is this appeal? This is called as departmental appeal, or it is also called as a review application. So what are the provisions relating to this? Let us understand. Yes, Geeta.
Section 107, subsection 2 provides that department can file a review application or appeal with the appellant authority. Commissioner may, on his own motion or upon request from the SGST UTGST Commissioner, examine the record of any proceedings in which an adjudicating authority has passed any decision order to satisfy himself as to the legality of the propriety of said decision or order. Commissioner may, by order, direct any officer subordinate to him to apply to AA within 6 months from date of communication of the said decision or order for the determination of such points arising out of the said decision or order as may be specified him. The AA can condone the delay in filing of appeal by 1 month if it is satisfied that there was sufficient cause for such delay. Such application shall be dealt with by AA as if it were an appeal made against the decision order of the AA. There is no requirement of making pre-deposit in case of departmental appeal.
Now, interestingly, when can a department go in appeal? The answer is simple. Where the order passed by the adjudicating officer was in favor of the assessee. So see, when assessee go in appeal, when the order is against the assessee that the officer has imposed tax interest penalty, the assessee can go in appeal. But let us say the adjudicating authority in the adjudication has dropped all the interest penalty tax. So it means it is an order which is in favor of the taxpayer. Now, against such order, the department can go in for appeal, which is also called as a review application. Now, for this particular case, the commissioner is empowered to first check or examine the proceedings, and only when the commissioner feels it is satisfied that it has to challenge this order. Why? Because it doubts the legality or the propriety of the order passed. The commissioner will direct any of the subordinate officer to make an application. Now, interestingly, the time period within which this appeal has to be filed is within 6 months of this order. And the condonation period is again 1 month. Now, what is the difference? When we have to file appeal to the commissioner appeals, that is the first appellate authority, we have 3 months plus 1 month. But where department has to file, it is 6 months plus 1 month. Correct? Interesting point, we have to make a pre-deposit of 10%. The department is not required to make any pre-deposit. So these are the important pointers relating to filing of appeal by the department to the first appellate authority. Now, with reference to section 107 bracket 6 and 112 bracket 8, specify the amount of mandatory pre-deposit which should be made along with every appeal made to appellate authority or tribunal. Does the pre-deposit have any impact on recovery proceedings? So the answer is simple. We just saw that when you want to go to appellate authority, you have to pay pre-deposit of 10%. Now let us say after appellate authority's order, you want to go to tribunal, you have to deposit further 10%. So you have already deposited 10%. Now you have to further deposit 10%. This is point number 1. The second question is, does the pre-deposit have any impact? The answer is yes. The moment you file pre-deposit, your recovery proceedings against the remaining order is stayed. So the recovery against the remaining proceeding or the remaining amount automatically gets stayed. So by depositing 10%, the balance 90% now cannot be recovered from you. Next, with reference to section 108, elaborate whether a CGST SGST authority can revise an order passed by his subordinate. Now, one is the department can go in for appeal, which we studied before this. Second is, instead of going into appeal, a superior authority like the commissioner can also decide to change the order passed by the adjudicating authority who is a subordinate officer. Now, how he can change? He can go for the process called as revision of order. So let us now understand what are the provisions relating to revision of order. So one, department can file appeal. Two, department can go in for revision of the order. Now, revision means changing the order, correcting the order. This can be done only by a superior authority. So if the adjudicating officer, let us say, is a superintendent or is a AC, then the revision can be done by DC. If the adjudicating authority is DC, revision can be done by JC, Joint Commissioner. And if it is Joint Commissioner, it can be done by the commissioner. So this is how revision can be done. So revision requires a superior authority to step in. Please read.
Section 2, subsection 99 defines revisionary authority as an authority appointed or authorized by under the CGST Act for revision of decision or
One
order.
second. One second. See, whenever you are reading a definition, you should not say subsection, you should say clause. So since it is a definition provision, you will say section 2 bracket 99 or 2 clause 99.
Okay, sir.
Continue.
Under the CGST Act for revision of decision or order referred to in Section 108. Section 108 of Act authorizes such revisional authority to call for and examine any order passed by his subordinates, and in case he considers the orders of the lower authority to be erroneous in so far as it is prejudicial to revenue and is illegal or improper or has not taken into account certain material facts, whether available at the time of issuance of said order or not, or in consequence of an observation by the Controller Auditor General of India, he may, if necessary, can revise the order after giving opportunity of being heard to the person concerned. Revisional authority can also stay the operation of any order passed by his subordinates pending such revision. Revisional authority shall not revise any order if, first, order has been subject to an appeal under 107, under section 112, or under section 117, or under section 118. Or second, the period specified under 107(2) has not yet expired, or more than 3 years have expired after the passing of the decision or order sought to be revised. Order has already been taken up for revision under this section at an earlier stage. Fourth, the order is a revisional order.
Now, so what are the points? So a superior authority, if it feels that the order which is passed by its junior authority is erroneous. Now, first requirement is that the order should be erroneous. Now, how it is erroneous? Firstly, it is obviously against the department. It means that where the order is in favor of the assessee, so some tax interest penalty has been dropped, or some exemption has been granted, or some ITC has been allowed. In all these cases, the order is said to be prejudicial to the revenue, or in other words, beneficial to the assessee. Now, when they can take up revision where the superior authority is of the opinion that the order is illegal or improper. So again, there has to be some finding as to the legality or illegality of the order passed. Second, it has been passed without taking into account some important facts. So the order has ignored important details, important facts, whether available at the time of passing the order or not, or in consequence of observation by the CNAG. So see, government departments are audited by the CNAG. Now, when the CNAG came for audit of this department, it found some order to not be proper. So where CNAG has done audit and the CNAG has pointed out some discrepancy in the workings of that particular department, then also the order passed by that department officer can be taken up for revision. In all these cases, they can revise the order. Obviously, now this revision will be in favor of the department, means against the assessee. So they will have to first issue a notice to the assessee, giving the assessee an opportunity of being heard. Also, the revisional authority can stay the operation of an order passed by the subordinate pending such revision. So stay means now it will say that whatever order was passed by the my junior is stayed, it is now no more applicable. Now, most important part is this. When can an order not be revised? Where already this order has gone into appeal. First, 107 means with the first appellate authority, or 112 that is tribunal, or 117 that is high court, or 118 that is Supreme Court. In short, once the matter goes under appeal, then revision is not possible. Second is the time limit. You cannot revise the order in the first 3 months. Why? Because first 3 months is the timeline given to appeal against the order. So whatever is the time limit for filing appeal against the order, within that time limit, now see if the appeal is to be filed by the assessee, it is 3 months. If it is to be filed by the department, it is 6 months. So in those period of 3 months, 6 months, the order cannot be revised. Further, there is a maximum time limit for revision of the order, which is 3 years. So minimum time limit is 3 months, 6 months, maximum time limit is 3 years. That is it. Between this period only, the order can be revised. Next, if this order was already taken up for revision, so once revision, it is taken up for revision, it cannot be revised. Or this itself is the revisional order. So it was taken up for revision, the order was revised. Now you cannot go against the revisional order and again revise it. So 2 times revision is not allowed in simple words. So this is very important because this provides the cases where revision cannot be done, right? Next, the appellate tribunal has the discretion to refuse to admit any appeal. Examine the correctness. Now we are on the second stage. Now we are filing appeal with the tribunal. Now the question asks is, can the tribunal reject or refuse to accept your appeal? The answer is, the tribunal has powers to judge your appeal or give judgment on the appeal. But the appellate tribunal cannot refuse the appeal until and unless you have not followed the requirements of the law, like not paid the pre-deposit or not filed the appeal within time. Except for this reason, it cannot reject the appeal. It will have to hear your appeal. Please read.
The statement is incorrect. Though the appellate tribunal does have the power to refuse to admit an appeal, it has the discretion of refusing the admission of an appeal in the following specific cases: where tax or input tax credit involved, or difference in tax or difference in input tax credit involved, or amount of fine, fees, penalty determined by such order does not exceed 50,000.
So first rule is it cannot reject, but in some cases it can reject. One, where the amount of dispute is very low, that is, it is not exceeding 50,000. One, two, where the pre-deposit is not made. Three, where you are going to the tribunal after the time limit for filing appeal is over. In these three cases, it can refuse or reject your appeal. Other than these three, in all other cases, it will be accepting your appeal. It will have to accept your appeal. Next, now there is a case study. So there is an order dated 20th August, which is issued to GH Private Limited. The Joint Commissioner of CGST has confirmed IGST demand of 280 crores. The company is disputing the entire demand and wants to know the amount of pre-deposit it has to make under the Act for filing an appeal. Now we all know pre-deposit is how much? It is 10%. 10% of the disputed amount. So 10% of 280 crores is 28 crores. Now comes the maximum limit. Maximum limit C and S per act is 20 crore, and for IGST it is 40 crore. So 28 crores has to be the pre-deposit, which is falling within the limit prescribed for pre-deposit, which is 10% up to a capping of 20 or 40 crores. So the pre-deposit amount will be 28 crores. Next, assuming that the appellate authority also confirms the order of Joint Commissioner and the company wants to file appeal before the tribunal, then determine the amount of pre-deposit. Now in this case, so when you have to file the appeal with the tribunal, again what you have to do is you have to again file another 10%. Now when you are filing this another 10%, what will happen? Your amount comes to 28 crores again, which is again less than 40 crores. Hence, again you will have to pay 28 crores. So you have already deposited 28 crores at the first appeal stage, which is within 40 crores. Now, second time when you have to go again and appeal at tribunal, you have to further deposit 10%, which is 28 crores. And this amount is again within the 40 crore limit. So your deposit or pre-deposit amount will be 28 crores. With reference to provisions of section 121, specify the order against which no appeal can be filed. This we saw the answer in the first question itself, that again 4 type of orders: transfer of proceedings, then giving you installments. Like these, there are 4 issues or 4 orders against which appeal cannot be filed. Next, Mr. A has filed an appeal before the tribunal against an order of the appellate authority where the issue involves relates to place of supply. Now, this is interesting. Where the issue involves relating to place of supply, the question is where will the appeal be filed? Now, see, the tribunal is at two levels. One is at national level and the other is at state level. Now, whenever the matter involved is of place of supply, the case will go to the national tribunal and not to the state tribunal. So that is what is the main point. You are required to advise him suitably with regard to filing of an appeal before the appellate forum. So whenever you have to file the appeal before the tribunal, in that particular case, you have to file before the national tribunal if the matter involved is place of supply. Now, with reference to provisions of unto it, list the cases in which case appeal is not to be filed and also specify other relevant provisions. I think this we have already done. So these are, students, the various provisions relating to filing of appeal and revision. Let us proceed now. Let us go to advance ruling. Now, firstly, students, what is an advance ruling? Now, please understand. Chachi, you have any question? No. So what is advance ruling?
Wanted to ask, like, for this appellate tribunal, means how much, only these provisions what we had covered today in the class, we can go with that and we will be able to summarize up the things.
But I'll request that you read the whole provisions. See, since we are revising and we have to revise total 5 chapters, I only am covering the question and answers so that at least I can cover the 5 chapters. But I will request that if you have not studied this chapter earlier, at least once you should go through the entire chapter. Anyways, the provisions are very small or less. You can just go through them once.
Sure, sir. Thank you.
Fine? Yes. Now, relating to advance ruling. Question is, what is advance ruling? See, normally what happens, you do the transaction, you either file or don't file your returns, and then the department continues their proceedings. This is the normal manner. However, if before entering into the transaction, before doing the transaction, if prior to that you approach the department seeking their opinion, seeking their inputs as to what should be the tax liability, whether you have to pay tax, whether exemption is available, whether ITC is available. So such cases come under advance ruling. So you are taking their ruling, you are taking their opinion in advance. Advance means you have not yet entered into the transaction. Before entering into the transaction itself, you are taking their ruling. That is what is called as advance ruling. So in cases of advance ruling, you are covered under this topic. Now, this topic has straightforward theory questions, which will be required to be learned by you so that you are able to get complete marks in the exams. So, first question, which are the questions for which advanced ruling can be solved? In other words, what are the issues that you can take to advanced ruling? Now, not all issues can be taken to advanced ruling. There is a list of specific matters, list of specific questions which only can be asked with the advance ruling authority. Yes, beta, please read.
Advance ruling can be sought for the following questions. First, classification of any goods service board. Second, applicability of a notification issued under provision of GST Act. Third, determination of time and value of supply of goods or service board. Fourth, admissibility of input tax credit of tax paid or deemed to be have been paid. Fifth, determination of the liability to pay tax on any goods or service under the Act. Sixth, whether applicant is required to register under the Act. Seventh, whether any particular thing done by the applicant with respect to any goods service amounts to or results in a supply of goods or service within the meaning of that term.
Now, please understand what issues are covered. So firstly, classification. So firstly, whether it is goods or service, and within goods, under which chapter it will be covered. Next, applicability of notification. Now, what are the notifications? RCM notification, exemption notification. So whether any exemption applies to you, whether your service will be under RCM, FCM. Next, what will be the correct time of supply and what will be the correct valuation. You can go for these issues. Then most important, whether ITC is available. Next, determination of the final tax liability that you are required to pay, whether you are required to get registered, and whether any particular thing done by the applicant with respect to good service amounts to or result in supply. In other words, whether your transaction is a supply or not. So for determining only these issues, you can go to advance ruling. So other than this, you cannot go to advance ruling. Now you'll say, sir, other than this, what is left? See, there are so many provisions like all procedural compliances relating to preparation of invoice, maintenance of books, filing of returns, audits. For all these things, advance ruling cannot be filed. So you cannot apply for advance ruling for any of these matters. Another important point, as you can see, determination of place of supply is not covered over here. Time and value of supply is covered, place of supply is not covered. So you cannot go to advance ruling asking them what will be the place of supply. That is not covered. Now, what is the purpose of setting up advance ruling authority? That I think you can read. So it is mainly to avoid any future litigations, also to help you avoid what is, let us say, you do something and then later on you get notice and unnecessarily you have to pay interest penalty. So all these things can be avoided. Now coming to next very important question. So let us say I and Geeta and Sachi, we all three are doing the same type of business. I go in for advance ruling for my business transactions to determine whether my business transaction is supply, and second, what will be the correct classification. Now I get some ruling that yes, it is a supply and it is falling under this HSN, so the rate is 18%. Now the question is, whatever ruling I have got, whether it is applicable to Sachi, whether it is applicable to Geeta, whether it is applicable to all other businesses who are in the same line, the answer is no. So what is the third question? Third question is, what is the extent of applicability of the decisions given under advance ruling? This is a very important point. It simply says advance ruling is only applicable to that person who has taken the ruling. Even though other persons are doing same type of transaction, whatever ruling I have received is not applicable to them. Please read applicability of advance ruling orders. Third point.
The advance rulings are given in personam and not in the rem. That is not to the whole world, and therefore rulings cannot apply to other similar cases. Section 103 provides that an advance ruling pronounced by AAR or AAAR shall be binding only on the applicant who sought it in the respect of any matter referred to in section 97(2) and on the jurisdictional tax authority of the applicant. This clearly means that an advance ruling is not applicable to similarly placed taxable persons in the state. It is not only limited to the person who has applied for an advance ruling. Okay.
See, this is a legal phrase which is in personam and in rem. What is in personam? So whenever any decision or order of a court comes and it is applicable only to one person, it is called as in personam. And when it is applicable to everyone, it is called as in rem. So in rem means to entire world, everyone. In personam means only to that one person. Now, the rulings given by AAR and AAR is applicable only to you who has applied. So like in my example, if I have applied, even though all of you are also in the same business, let us say we all are distributor of mobile phone. So all of our businesses are same. Still, whatever ruling is given to me, that is applicable to me only. It is not automatically applicable to others, even though you are doing the same line of business. Now, what is AAR and AAR? So when you go at the first time, you go to AAR, which is called as Authority for Advance Ruling. So it is generally the departmental officer of lower rank. However, whatever ruling they have given, if you are not satisfied against that person's ruling or judgment, you can appeal to a higher officer, which is called as AAR. So full form of AAR is, first is AAR is Authority for Advance Ruling, AAR is Appellate Authority for Advance Ruling. So like how against an order we go in for appeal, similarly here against the first advance ruling order, you can go in for appeal to the appellate authority of advance ruling. So even in advance ruling, you have the appellate authority. Now the next question is, within what time the ruling should be passed? The interesting point is there is no time limit given for giving the advance ruling order. So advance ruling time limit is not given, but this order will be binding on the person who has applied. Now the next question is coming, till when? So this order is applicable or binding on you till the time you continue that type of transaction for which you have applied for the ruling. The moment you change your business, you change your transaction, the effect of the ruling is gone. The next question is, when the order given by AAR, AAR will be said to be void ab initio? The answer is, where at the time of getting the ruling or order, you have given wrong facts or you have suppressed important facts. You have misrepresented the facts. That is, you have obtained this ruling by means of some fraud. So if you are giving wrong details and getting a favorable ruling by forging the documents or giving wrong facts and details, then whatever ruling is received by you is not a valid ruling. It will be considered as void ab initio. Now, the next question is, who can obtain or who can apply for advance ruling? Again, this is an important question. So first question was on what matters you can apply for advance ruling. Now this question number 6 is, who can apply for advance ruling? Please read, beta. Who is given the power or option to apply for advance ruling? Please read.
Yes, sir. Advance ruling first. An advance ruling under GST can be sought by a registered person or a person desirous of obtaining registration under GST law. Therefore, it is not mandatory for a person seeking advance ruling to be registered. Section 1032 stipulates facts, circumstances supporting the original advance ruling have changed. Therefore, once Ranjan has sought the advance ruling with respect to an eligible matter or question, it will be binding till the time the law facts, circumstances supporting same. Third is no tax advisor's view is not correct. As section 100, if the applicant is aggrieved with finding of AA, so it is incomplete. Page. Yes. With the appellate authority for advance ruling. Similarly, if the concerned jurisdictional officer of CGST SGST does not agree with the finding of AAR, he can also file an appeal with AAR. Such appeal must be filed within 30 days from the date on which the ruling sought to be appealed against is communicated. Appellate authority may allow additional 30 days for filing the appeal if it is satisfied that there were a sufficient cause for delay in presenting the appeal. 4. Section 103 provides that an advance ruling pronounced by AAR is binding only on the applicant who had sought it and on the concerned officer or jurisdictional officer in respect of the applicant. This implies that an advance ruling is not applicable to similarly placed other taxable person in the state. It is only limited to the person who has applied for an advance ruling. Thus, Sambhav will not be able to apply the classification of the goods that will be decided in advance ruling order to be obtained by Ranjan to the goods supplied by him in Delhi.
Okay. Now the next question is, what is the procedure? So firstly, I as a taxpayer will make an application to the AAR authority. After my application, the AAR authority will send a copy of the application to my officer so that it can get details from the officer also. Now, the AAR authority will examine my application along with the records which it has got from the officer, and thereafter it will pass an order either accepting or rejecting my application. So first step is whether my application is acceptable or not. That will be checked. Now let us say my application is accepted. Then what will happen? The application for advance ruling will not be admitted in case where the question raised is pending or decided in any appeal. So where the matter is already pending in any proceeding or appeal, they will not take my case for advance ruling. If the application is rejected, it again should be by way of a speaking order giving the reasons for rejection. Now, if the application is accepted, the AAR shall pronounce its ruling on the questions which are asked in the application. And before giving the ruling, it shall examine the application and further material furnished by either the applicant or by the officer. Before giving the ruling, the AAR must hear the applicant or his representative as well as the officer. If there is difference in opinion between the members of AAR, they shall refer the point on which they differ to their higher authority, which is the appellate authority for advance ruling. The authority shall pronounce the advance ruling in writing within 90 days from the date of receipt of application, and the copy of advance ruling duly signed by the members and certified in prescribed manner shall be given to the applicant and also the concerned officer. So these are some relevant points relating to advance ruling. Now let us go to the last topic, which is miscellaneous provisions. Now this is again a small topic, a simple one. So let us again do it in Q&A format. So what are the questions? So first is explain how the GST compliance rating score is determined. So there is a interesting like how you had markings in schools and in exams. Even GST law has provided for giving you a rating depending upon how well you are following the GST timelines. Next question is, when shall the particulars relating to any proceedings or prosecution be published? So the second question is about publishing of your proceeding. So if any action is going against you, can it be published in newspaper? What are the provisions? Next, explain the provision relating to rectification. Now in the previous chapter, we studied appeal, we studied revision. Now the third option is that whatever order is passed by the officer, it can be rectified by the officer itself who has passed the order. So the provisions for that. Next, very important question. Whenever department is taking any action like issuing a notice, giving an order, how this notice order has to be given to you, that is served on you. Section 169 gives a list of different ways of serving the notice order. That is again to be studied in detail. So let us first go through answers of various these provisions. Yes, beta, please read. So first was about GST rating.
First one, sir.
Yeah, you can go in
As
sequence.
per section 149(2), the GST compliance rating is determined on a scale of 10 on the basis of prescribed parameters.
So
Second.
out of 10, rating will be given to you. That is the first point. Second was when your information can be published in newspapers and all. Read.
When the commissioner authorized officer is of the opinion that it is necessary or expedient in the public interest to publish the name of any person and any other particulars relating to any proceedings or prosecution under CGST Act in respect of such person, it may cause to be published such name and particulars, section 159(1). No publication under this section shall be made in relation to any penalty imposed under CGST Act until the time for presenting an appeal to the appellate authority under section 107 has expired without an appeal having been presented or appeal, if presented, has been disposed of.
So when your matter with your name can be published in the newspaper. So first point is where the commissioner feels it is important. Now when this will apply, whenever you have done some big fraud. So the commissioner wants that the people in general should come to know that you are a fraudulent person and such action is taken against you. It may order the publishing of your details and the details of your order in the newspapers. Secondly, but before they publish, they will have to wait for the time limit provided for filing appeal, which is 3 months. So for first 3 months after the passing of order, they will wait to see whether you are going in for appeal, because if you are going in for appeal, the matter becomes sub judice. Now no further action can be taken till the appeal order is received. But if you do not prefer appeal in 3 months, then the commissioner has powers to order publicizing your details in the newspaper. Now, what is the next question? 161. The next question is that if any order is passed by the authority, one option is you go in for appeal. Second option is department go in for appeal. Third option, any superior officer of the department can revise the order. Now the another option is, can the officer who passed the order, can the officer himself rectify the order? Now this rectification is possible as per section 161 only where the original order passed by the officer was found to be erroneous or mistaken. So where there is some mistake in the order, that order can be rectified. So now we are studying section 161, which provides for the rectification mechanism of the order. Please study the provision. Please read provisions for rectification.
Section 161 lays down that any authority who has passed or issued any decision or order or notice or certificate or any other document may rectify any error which is apparent on the face of record in such decision or order or notice or certificate or any other document, either on its own motion or where such error is brought to its notice by any GST officer or by affected person within a period of 3 months from the date of issue of such decision or order, notice, certificate, or other document, as the case. However, no such rectification shall be made after a period of 6 months from the date of issue of such decision, order, notice, certificate, document. Further, said period of 6 months shall not apply in case where rectification is purely in nature of correction of clerical arithmetical error arising from an accidental slip or omission. Principles of natural justice should be followed by authority carrying out such a rectification if it is adversely affects any person.
Now, very important point. So wherever there is some mistake which is apparent on the face of the record, so something is clearly seen that while passing the order, while writing the order, the officer wrongly added one more zero, or while writing the HSN in the order, it wrongly wrote some other HSN or applied a wrong rate. When these apparent mistakes are there, then only the order can go in for revision. This is point number one. Point number two, what is the timeline? So wherever you are affected by the order, so you are the taxpayer, you can apply within 3 months. Further, it says no rectification can be done after 6 months. However, this 6 months time limit has been relaxed where the rectification is purely in the nature of correcting clerical mistake. So in case of correcting of clerical mistake, then there will be no time limit of 6 months applicable. It can be done even after 6 months. Correct? Now coming to 169, very, very important section. What it deals with? It deals with the manner in which the department can send you the notice, the department can send you the order. So it is giving the list of methods by which any of these orders decisions can be passed. So for passing of any order decision, what are the different mechanisms, methods provided in the law that is given in 169(1)? Please read the list.
Section 169(1) provides that any decision, order, summons, notice, or other communication under CGST Act and the rules made thereunder can be served by any one of the following methods. First, giving, tendering directly, including by a courier to the addressee or authorized representative or to any adult member of family residing with the taxable person, or second, by registered post, speed post, courier with acknowledgement due at the last known place of business or residence, or third, by email to the email address provided at the time of registration or as amended from time to time, or fourth, by making the same available at common portal. Fifth, publication in newspaper circulating in locality in which addressee is last known to have resided, carried on business, or personally worked for gain. Or if none of the above modes is practicable, then by affixing at last known place of business or residence. And if such mode is not practicable for any reason, then by affixing a copy thereof on the notice board of the office of the concerned officer or authority concerned.
See, what are the different mechanisms? First is giving by hand. So the department can send some junior clerk to your residence, to your office address, and can give the notice by hand to you or to any of the adult member in your family. Second, by sending it through registered post with acknowledgement due, or speed post or courier with acknowledgement due. Third, by sending you the notice via mail. Now, this is very commonly followed. So notices comes to you as a mail attachment, or order comes as a mail. Then by putting it in the GST portal. So GST portal has various tabs for notice, orders, etc. So by simply uploading it in the GST portal, I can forward or I can send you the notice. Next, I can publish that notice in some local newspaper. Last, if none of this is possible, I can paste that paste that notice or order at your last known business place or residence. So outside or on your door of your residence or on the door of your office, I can paste this notice or order. And where this is also not possible because your addresses are not known or you're not available on the addresses, then on the notice board of the department itself. So these are the different ways how I can inform you that I have issued this notice or I have passed this order. So this has to be informed to you by any one of these 6 methods. Now next comes, when can your confidential information be disclosed? Firstly, can it be disclosed? Answer is yes. The confidential information like your GSTR 1 or 3B details where you are giving all your business details, that can be disclosed by public servant for only those purposes which are mentioned in 158 bracket 3. What are these? First, for prosecution, for carrying out the objects of the act, for service of notice or recovery of demand, for furnishing information to court in a proceeding where government is a party, for audit of tax receipts, inquiry into conduct of GST officer. So they have given a list of those cases where your information can be shared with someone else. Now, next is section 168. It is the power of the board to issue some orders, instructions. Again, this point is important. Can the board issue orders, instruction to its officers? The answer is yes. But for what purposes? The reason is to ensure uniformity in implementation. So it should not happen that an officer of one area is treating this supply as exempt, but the officer in another area is treating it as taxable. So whenever there are such ambiguous points or points which are having different views, different opinions, the department can request the board, and the board in such cases can issue such order, instructions, so that there will be uniformity in the action of the officers. Now, important, these order instructions are binding in nature. The general understanding that prevails is that circular is binding on the officer, that is the department, but not on the assessee. However, in case the circular states anything contrary to the law shall prevail over the circular. So the circular is binding on the department officers, not on the assessee. And where the circular is going against the law, even that can be not followed by the department or its officers, right? And last question is, the time limit provided under the act cannot be extended. Now, this is a very important point. See, you have different time limits. Like we just saw, 3 months for filing appeal by you, 6 months for filing appeal by the department, one month condonation period. Then can you exceed the time limits? So let us say instead of 3 months, can you file after a year? For rectification, we saw that there is some time limit. Can the time limit be extended? Please read.
The statement is not correct. The government has power to extend the time limits provided under CGST Act. However, such powers are not unbridled powers. Section 168A empowers the government to extend the time limits only when the actions cannot be completed or complied with due to force majeure. Here, force majeure means war, epidemic, flood, drought, fire, cyclone, earthquake, or any other calamity caused by nature affecting the implementations of the provisions of the CGST. This power can also be exercised retrospectively.
So, under Section 168A, the government is given special powers to extend time limits. But this can be done only where a situation like force majeure occurs. Now, force majeure is a word which came to light during this pandemic period of COVID-19. So what is force majeure? So force majeure is where, because of some uncontrolled situation, like an epidemic, like a war-like situation, at that time, nobody has control on that So such situations are called as force majeure situations. In such cases, because now at that time, let us say during pandemic, businesses are closed, or during war times also, many businesses are affected, or at times the government imposes curfew or a no-fly zone. So many actions are taken. Maybe internet is shut down by the government during times of wars, etc. Or if any natural calamity has happened, maybe not in the entire country, but in different parts like flood, fire, typhoons, etc. So in such cases, the government has power under 168A to extend the different timelines provided in the law. But these are all very extraordinary special powers. So normal course, no such extension can be done. All time limits are binding. But in these exceptional circumstances, the time limits can be exceeded. So students, with this, we complete all the topics that were supposed to be done today. So we have completed majority of them completely and few of them as only the important ones. But what is very important is you are supposed to read that entire chapter once if you have not read. If you have already read and understood, then at least read the let us recapitulate and these past exam questions. At least for the topics that we cover today, which are mainly theoretical topics, it is important that you do 2 or 3 readings so that these important pointers are known to you, and maybe some 2 or 3 questions when they come from these 6 topics, you are in a position to answer. Fine, students. So I hope all things that we covered today are understood.
Yeah.
Yes. Perfect then. Let us close for today and let us catch up for further topic for revision. Good day, everyone.
Thank you, sir.
So
Good day.
one problem, there is a compounding of offenses. For in
Yes.
that, what is the procedure I can
See, what is
how
compounding firstly? Compounding means where there are multiple penalties are being levied. Many times they become overlapping. So for one wrong act or one offense, there could be multiple penalties or multiple actions given in the law. Now, it should not happen that for one action you should be penalized twice or thrice. So in such cases, the procedure is you have to write an application to the commissioner requesting the commissioner to merge these 2, 3 provisions and make it one. That is what is compounding of offense. Right, beta? Understood?
yes, sir.
Yes, sir.
So the procedure is you have to make a written application. Fine? Okay. So let us close. Thank you. Thank you very much. Good day.
Thank you, sir.
So,
Yes, Ashok ji.